go give them a call, check on their website, find out more for your own information. But right now what we're talking about is WAMU, what happened to that. And do we have that next video ready? Let's go.
Paul, irritable. Then he went to Washington Mutual. Thanks to their flexible lending rules, Paul got a quick approval. Now he's always in a great mood.
Hey!
Oops, my bad. No problem. I guess I'm having tea.
Congratulations on your new home, Paul. Glad we could make your day.
You got me.
Funny but sad. Let's go to July the 1st, 2008. This was, again, was just 2 weeks after the June 19th, where there had been a restructuring of the home loan group there at WAMU. And Jim Corcoran, head of retail banking for WAMU, left. WAMU shares were $3.10 a share. What did it mean when Corcoran left?
Well, it was just one more step down the road. When they closed the home loan centers right before, it was a retrenchment. And for the employees, it meant a lot. Customers almost meant nothing with them, because Killinger was the face of the company. The employees knew who Corcoran was, of course, so it meant something to them. And so it was just another step down the road of insecurity for a lot of the employees. Dan and I, we understood what was going on, and we always thought the worst case scenario was we would be sold.
Okay,
We
well,
never thought we'd go out of business.
you said Killinger was the face. Remember we
Yes.
talked just a minute ago about April 2008 and how important that was? Let's go to, here we are in July 2008, an article in the Seattle Times. Treasury's Paulson warned the WAMU CEO to sell before it failed, and Paulson said to Killinger, you should have sold to Chase in the spring, and you should do so now. Things could get a lot more difficult for you. And here's essentially Killinger's response. He called Paulson in July to ask that the Treasury Secretary use his influence of the SEC to add WAMU to a list of 19 financial institutions that were temporarily protected from a form of trading called naked short selling that can drive share prices artificially low. There was some big bad naked short selling that was going on, and WAMU was very negatively impacted, right?
That's correct.
First off, what is naked short selling, and then what did it do to WAMU?
Well, short selling is the opposite of buying a stock. When you buy a stock, you hope it rises in value, and then you gain from that. When you short a stock or sell a stock, you sell it hoping that the price goes down, and you gain from the amount you buy, or you sell it.
So you were selling an option, essentially?
You can sell the option, you can sell the stock, either way.
But you're driving the price down if you're selling it.
That's correct.
You're betting that the market's going to drop.
That's correct.
So it's the same thing when speculators took the price of oil up to $140 a barrel, or however much it was.
And then when it started on its ride down, the shorts made a lot of money, the people betting that it goes down. And they also help push it. It's momentum. Just like you can get a lot of momentum in a market like we've had in the last few months, going up by having more and more money flowing in to buy, same thing on the way down. Same momentum can occur when you short the stock. Naked, the reason by naked is that's short selling not as a hedge. Like, you don't own any of the underlying stock. You don't own the underlying bonds. And so you're hedging. You're not. You're speculating.
Kerry Killinger did the right thing asking for protection against short selling, but the fact that there was no protection, that really did accelerate the downspin of the stock price.
And didn't Paulson know that?
Well, one thing that's fascinating about this is there were the 19 largest of the financial institutions with 3 exceptions. One was WAMU, the 6th largest bank in the country. One was Wachovia, the 4th largest bank in the country. And another one was ETrade Financial, which was about 19th or 20th.
WAMU headquartered in the Pacific Northwest. Wachovia headquartered in Charlotte, North Carolina. And ETrade.
I'm not sure where ETrade's headquartered, but it's not in New York.
But all the others, the other 16, were all headquartered in New York, right?
Not necessarily. No, Wells Fargo and Bank of America weren't. But the bulk of them were, yes.
I see. All right, well, let's move forward now. We've gone from July now to September the 8th, 2008. Killinger's out, Alan Fishman's in. WAMU's at $2.53 a share. Who was Alan Fishman and what was he brought in for?
Well, actually, that's interesting because we're from June and July where there was a lot of panic, and into August where it was kind of back to business as usual for a little while. It was kind of strange in that things kind of calmed down. But then towards the end of August, it was almost an environment where everybody's wondering what's Killinger going to do. Everybody was waiting for the next action. Everybody wanted something to be done. So when Killinger left and Alan Fishman came on board, it was almost a sign of hope for most of the employees. You could just feel it and sense it in the branches.
And in fact, 4 days later, September the 12th, Fishman says that WAMU's liquidity is stable at $50 billion.
Mm-hmm. Now, what you saw with Fishman was either it was a clear message that either he was going to sell the bank for a reasonable price or lead the bank to recovery. It was a clear, and that gave the sense of some calmness, and that you had actually a leadership that had a mission to either sell the bank at a reasonable price or to
we go for another couple of days because our time, unfortunately, is getting short. September 15th and 16th, Lehman Brothers dies. BOA buys Merrill Lynch, and WAMU's at $1.61 a share. What was the mood at WAMU when Lehman Brothers and Bear?
So just in that short span between about September 8th and a week after, you have Lehman's failure and the acquisition of Merrill by Bank of America. Everything seemed to go really downhill from there.
But just the next couple of days, Goldman Sachs was hired by WAMU to help it in its change of ownership potential. The SEC banned short selling at that time, and WAMU's price had gone up significantly to $265 a share.
Even though the stock price was up, it was pretty much too late at that point.
Let's talk about September 25th. Interesting day. WAMU's price was trading at $2.62 until 1 p.m. Eastern Time. At 1:24, 24 minutes later, it dropped to $1.66, and in that afternoon, the Office of Thrift Supervision seized WAMU. You were in the bank at the time.
We were in the bank watching the stock price fluctuate. We were talking about it.
You were saying, oh my
gosh, trying to figure out what was going on.
Yeah. And then you got this memo from Chase saying they bought WAMU for $1.9 billion, and there was a conference call set at 6:15.
6:15, yes.
And in that conference call, you guys were sent a PowerPoint presentation, and wow, how could they get all this done in a 3-hour period of time?
That'd be by a miracle.
It's about 23 pages long and would have taken some time to prepare, yes.
It immediately transformed Chase into the largest depository institution in the United States.
Yes.
For $1.9 billion. We have a minute left and, an hour's of show left, so you're going to have to kind of tell us why should this not have happened?
With OTS, I think most people think it was a traditional acquisition where Chase bought Washington Mutual. In fact, OTS, Office of Thrift Supervision, took over the bank. You can speculate it might have been premature. Maybe Alan Fishman might have sold the bank, might have saved it. But at the end of the day, what happened was when OTS took over the bank, it took it out of the public and therefore rendered the stock worthless. So really...
So as we close, I've got to ask this. You're advising your customers, and we've got 10 seconds to do this. How are they different than the bank? Many investors, they rebalance their portfolios. What do you mean by that?
Well, the lesson learned here is that you don't want to be too overweight in one specific investment, whether it's real estate or stock. And when you want to reallocate, that means taking advantage of opportunities that are present or removing risk from your portfolio and not just buying and holding something.
And that's got to be the last word. We'll see you right here on Public Exposure next week. Take care.